Hi, welcome back to Stop Being Sold. My name is Michelle, and I'm here with Brian. And in this video, we're updating you on the new IRS rule change that was set to strip older 401k investors from that cherished tax break and possibly even the ability to use catch-up contributions to save more for retirement. Under the Secure Act 2.0, passed in December 2022, investors who made more than $145,000 must now make those catch-up contributions to an after-tax Roth 401k account instead of that pre-tax traditional 401k. Now, the problem with this is that if your company doesn't offer a Roth 401k provision, and not many do, you're not going to be able to make those catch-up contributions at all. And that may leave a lot of people who are closer to retirement unable to use those catch-up contributions to save even more. Now, this new rule was set to start next year, but the recent announcement from the IRS has pushed back the deadline for this rule change to 2026. So we've got, 3 more years here, 2 more years,
Yep.
giving companies more time to adjust and more time for investors to plan. Well, Brian, it seems like just yesterday, and I think it was, we did a video on the Secure Act 2.0 provision, and now the IRS is making rule changes again.
Yeah, we've done a few videos lately on IRS changes, and it really underscores the ongoing unpredictability surrounding IRS regulations.
Yes, it does.
It's no secret that navigating this tax code is a complex endeavor, but when rules shift, it can leave individuals and employers scrambling to adapt.
Absolutely. And regulation changes also make long-term financial planning a bit challenging.
You're exactly right. When changes like this happen, companies and plan providers and even employees have to scramble to adapt, right?
Yeah.
This is terrible when it comes to long-term financial planning for yourself. You make a plan, stick to it, and then the rules
They
change.
change, right?
Happens every time, right? Then you have to go back to the drawing board, make sure you still be on track for your original plans that you actually had in place for your retirement.
Yeah.
Sometimes these changes, though, could force you to make changes to the whole overall strategy.
Let me ask you this. Are you surprised the IRS pushed back this deadline?
Businesses were really making us think about
Yeah.
this and petitioning the IRS for more time. So I'm not really shocked. These are complex products. And when the rules change, it's usually a couple years that's needed to implement them.
Right.
Yeah, and think about all the companies that are offering the 401k retirement plans. The original deadline was going to be a logistical nightmare, especially for those that didn't even have Roth accounts inside their plans, which, like you said before, many don't.
Yeah.
Think about all the smaller companies that would have had to struggle to meet the original December 31st deadline for employees to continue making their catch-up contributions, which were capped at $7,500 in 2023.
Yeah.
So this delay has eased the pressure on these businesses to get the Roth in place in order to offer competitive benefits to their employees.
This delay also gives high-income earners, those making $145,000 or more, a few more years to make those contributions to their traditional 401ks and get that tax break now, or at least plan for it. But as you mentioned earlier, the underlying issue here really is that none of us can predict what Congress or the IRS, for that matter, will change next. So what do you recommend people do to hedge against this uncertainty in tax and saving laws?
Honestly, just don't get too worked up over this.
Yeah.
And here's what I mean. Focus on your long-term plan that coordinates with the current laws and your regulations that we have today.
In place today, right?
Yeah, plan for today. Build your plan that meets your goals and your income retirements for your retirement. Stay true to what works for you today. If you feel taxes will be higher in retirement for you personally, plan for it by diversifying between tax-deferred and Roth accounts.
Yeah.
If the rules and regulations change on you, revisit your plan and determine what moves you need to make at that time.
And also make sure you subscribe to this channel because Brian and I are on top of IRS changes and congressional changes that affect your financial future. And I think the number one thing, if I can take anything away from what we do on this channel, is that the knowledge is power.
It is.
And
Yes.
staying on top of that. So
Definitely.
Also, if you like the content of this video, hit that like button. And while you're at it, go check out a video we did on major 401k changes that are happening right now. They go into effect this year and some in the next year as well. So go check that out. Link is in the description. below this video, as well as the pinned comment. And again, don't forget to subscribe. Brian, thank you so much for this. Appreciate it. And thanks to everyone who watched.
Thanks, everyone. Have a great day.